let's also talk about the results season, because we are in the thick of it, and a big company comes out with its Q3 print, and that's Indusind Bank.
Yes, Indusind Bank. Now, analysts are expecting, because there is a moderation in the cost of funds, the net interest margins are likely to remain flat. Their profit after tax is likely to grow 16.5%. Their net interest income is expected to grow almost 17%. Regarding the asset quality, the gross non-performing assets are predicted to improve marginally to 1.9%, up from 2.1% the same quarter a year ago. The net non-performing assets, on the other hand, are expected to remain steady at 0.6% for the quarter ended last December. Net advances, according to the exchange filings, grew 20% to 3.2 lakh crores in the quarter gone by. Total deposits too jumped 13% year on year to 3.7 lakh crore, up from 3.25 lakh crore a year ago period. Some of the key factors that the investors and industry watchers should look out for in the results are the outlook on retail deposit mobilization, the margin trajectory, and the management's growth outlook for the year to come. So that's what we have for Indusind Bank.
All right, and the stock also this morning is trading with a slight cut, but then again, yes, we are seeing the the entire market feeling that down heat, and that is being driven by your banking pack, which is down about 1% or so. Indusind Bank this morning, the stock is down somewhere around 1.3%, but overall, in the private banking space, Indusind Bank has been an outperformer in the last 1 month, where stocks have, given negative to returns of about 15%. Indusind Bank has given returns of over 35%. Even on a 6-month basis, again, we are seeing a good bit of outperformance on a 1-month basis as well. But let's carry this discussion forward with Mr. Mohit Gang, co-founder and CEO of Money Control. Mohit, thank you for joining us here on News 9. We were talking about Indusind Bank numbers and what will be the key expectations, but any inferences that we can draw from the results of HDFC Bank?
Hi, Suyash and Amit. Good morning. Look, I think I don't think so. We can draw too much of inferences from HDFC Bank to results of any other bank per se, not just Indusind Bank, because I think HDFC Bank is a classic case of a big size elephant now trying to make its move, right? So I think the issues of merger with HDFC Limited are still getting sorted out. The bank is in dire needs of deposit growth to fund its credit book, right? And I think those issues are very well known in the public domain. So there's nothing new which comes out from the domain of HDFC Bank. Yeah, the results were a bit upsetting on HDFC Bank, especially on the NIM side, and also to see a EPS decline in over 10 years, I think was a first new from an HDFC Bank kind of perspective. So that's kind of spooked the markets a little, because a bank of that kind of quality with steady, stable results, giving that kind of an outlook was not really anticipated in the markets, right? Having said which, on the Indusind Bank front, yes, I think the bank for last 1 year, 2 year period has been looking extremely steady and robust on all parameters. Look, honestly, I think we're looking at an ROA of around 2% and an ROE of around 16.5 or around 17 odd percent thereof, which is a great trajectory for a bank of this size and order. It's been showing steady climb in its CASA mix also. I think they are aiming for a 45% kind of a CASA mix. We're trying to mobilize more of retail deposits and retail liabilities, which is actually boding well for the bank. And I think the numbers have already been put out by Amit. Markets is anticipating a good set of numbers, a steady set on NIM, fairly stable out there. So my sense is, I think once the entire dust settles around the banking pack, which should be a matter of few days now, and I think we should see a good uptick on Indusind Bank. I think overall market sentiment plus the results or the performance of the bank is supporting a good number going forward.